Good morning, traders, and this is your Aussie day trade setup for today. So we've ended up with another indecision bar, pretty much a sort of a hanging man at the moment. But the important part here is that we've got a crossover that is very close. These two stochastics, the fast and the slow, have crossed over as well. And what we're waiting for the daily is a crossover on the stochastic MACD to give us a confirmation on the oscillators. So trend is technically up. However, there is a potential trend reversal in play at the moment. So let's just go through this. So from the 3 hour, you can see we are still above the moving averages. We did break below them and then rally. And as I said yesterday, you're looking for longs off the bottom of the range, and that's exactly what happened. And you're looking for shorts on any pullback, which is exactly what happened as well. Now, we need to go lower down here just to get the context of what's actually happening here. So first things first, remember yesterday we had our range drawn in like that, which was 50% of the range, and if we broke through here, we were looking for the bottom of the range. That target was done. This entry here was fairly interesting because on lower time frames it was technically in a downward trend. But the interesting part here, let me change those colors for you now. Okay, so the interesting part here is that we came back at the open to the 50% Fibonacci, and I'll just go to the 5 minute for that quickly, just to show you what I'm talking about. So this moved down, slap bang on the 50% Fibonacci, seller stepped in and drove this thing down to the bottom of the range. Okay, and you see what I mean by the trend being down, a little bit of chaos here, and then you can see we're below, sort of forming a little range below the moving averages. If we look at the 12 minutes, you'll see nothing ever changed. Although price gapped up above the trend was continued to the downside. So that was definitely a fairly decent trade to the short side, and then obviously your target area would have been bottom of range right here, and then looking for a long. Okay, now let's get rid of the noise. I'm going to leave those in now because what has happened globally is that the demand for oil has fallen so drastically that the oil companies are paying you to take a barrel of oil in the US. So that is a fairly significant signal because it is an indication of what's exactly going on in the US economy at the moment. So earnings season is not really going to give us any real clues as to what the impact is going to be over the next couple of months or next year or so. But the fact that the demand for oil has fallen so drastically, and as a result, oil got hammered last night. The net result out of all of that was that, let me just get back to my price charts. We had the Dow Jones down 2.4%. We had the S&P down 2.7%, and the one that we need to worry about, which is the Nasdaq, was down 1.2%. Okay, so rand dollar at the moment is 18.85. So obviously the dollar strengthened, and where we are at the moment, China is down 1.3% right now, and we're looking for 10 cent quickly. 10 cent is down 2%. So I suspect we're going to get a gap down. Futures market at the moment in the US is still falling. So S&P is down 0.5%, Nasdaq is down 0.4%. That's definitely still falling. So I anticipate that we are going to get a move to the downside. Now, the first thing I want to do here is get the Fibonacci of the range, which again is slap bang on the 50%. So I'd expect a move to the downside, and this measured move here is going to play out pretty much to the 61.8% extension, which should coincide with a 1 hour 150 EMA. Okay, so you have 150 EMA, so it should take a few hours to get down here. By that time, this should pretty much meet it. Okay, now the other thing that we need to bear in mind here is we do have a fairly strong wedge. Okay, and with yesterday's price action, we have broken that wedge. Now, that's the one thing to bear in mind, but at the same time, just draw yourself a channel here along the top and along the bottom there. Okay, because that could also still hold up price. So yes, the wedge is broken, but it could just be a spike and then into a channel, which often happens. Okay, so everything depends on what is going on in the international markets right now. Yeah, so what's the plan of action for today? I'll run this off the 15-minute for you guys today. We are at a 50% Fibonacci, okay, which also coincides with a level here. Oscillators are grouped to the upside. Look at my stochastic MACD. It is below the zero line, which is indicating this is still a bear trend, and this is just a pullback. Okay, one thing that I do want to confirm is that I get a trend change on the hour, which we don't quite have yet. That is going to be confirmed on a break below 44,424, which will break the range. Okay, and that's pretty much what I'm expecting. So I'm expecting a gap down. I'm expecting pretty much, let's see what kind of, if we get some kind of price action. I don't think there was, here's one here. Okay, so I'm expecting this kind of price action today. Sort of a gap down, pretty big gap down, a bit of a half-hearted attempt to recover, pick up a level, and then another fall. Whether it sticks at the bottom of the range is debatable. I think the logical thing would be to take profit there, take profit at the bottom of the range, make sure that you've got all those levels drawn in, because there are a few. You can see there's one there, there's one there, and there's also one there. Okay, so all my fractals have levels. That's where we are. Come back to this chart here. We're expecting a gap down. What I would expect is a break through the 150 EMA, find some support on one of these levels, bounce back up, reject the 150 EMA, okay, or even gap below these levels and reject the levels. And you can see there are another little level inside there on the 15-minute right there. So in other words, gap down, come back and test it, and then continue on our merry way to the downside, breaking the channel and giving us a fairly significant move to the downside. Okay, so that's pretty much my plan of action for today. So looking for shorts today, specifically from the Open, and then at the US Open we'll see what transpires. But for the European Open and South African Open, I'm looking gap down, bit of a pullback, find the level that it pulls back to and it rejects. It needs to reject it with either a pin bar like that, or a inside bar like that, or an engulfing bar. That's not quite an engulfing bar. There's an engulfing bar. There's an engulfing bar there. That's the kind of level that we're looking for. Okay, and obviously it would be nice for all of that happening below the moving averages, but I think that's going to be a little bit messy based on what's happening at the moment. Okay, there we go. I hope that helps, and keep those stops tight, and hopefully we get a breakout, which should make you some decent tom today. Anyway, that's all for me. Catch up with you later. Cheers for now.